Matt, do you use social media, YouTube, Facebook? Do you use any of that? How do you do it?
Sure. So we've raised investors a couple of different ways. As you do, Steve, we go for referrals. And the first thing you can do to get more investors is to take care of your investors. Because that will generate more investors for you. From the investors that already are with you, they'll open up more of their own capital to do more deals with you, and they'll introduce you to other people that they're affiliated with that want to get to know you as well. So, but to answer your question, yes, we do some Facebook, not a ton, mostly YouTube, and that originated out of shooting YouTube videos for Bigger Pockets. Because they wanted more of a video platform for what they do and doing Facebook Lives for them and everything like that. And that began to generate, indirectly, people reaching out to us to say, hey, listen, I see what you're doing, buying apartment buildings and flipping houses and doing all that cool stuff on Bigger Pockets. I want to get to know more about your business. And so we would schedule calls and establish a pre-existing relationship and get to know their goals. And I think that another tip to the audience here is if somebody calls you and says, hey, I love what you do, I want to invest with you, your next response should not be, okay, great, here's a deal, right? That you're not establishing a pre-existing relationship at that point. You got to I try and understand people's goals, where they're coming from, where they want to go, understand my company, and that's I rarely do I even bring up anything that we have going on in our pipeline on the first or second call. Once I've established an understanding of where they're coming from, then I can convert that into okay, well, if you're interested, this is something we might be working on in the future. And we do a newsletter to keep up with our investors. So I do a lot of digital touching of our investor base.
Yep. So for me, there's 3 things that people want to know when they're going to invest in my company. They want to know about me. They want to know about my background. So you have to know people what you're doing, what your history is, what your track record is. And if your track record's not perfect, that's okay. Because if you did 100 deals, there's no way you're going to tell somebody that you're perfect. They're just not going to believe that, right? So always be honest and give a full disclosure about yourself and your history. 2, they want to know what you're going to do with their money, what you're investing in, how you're going to make that return, who are your partners, who are your contractors, who's your securities attorney. So I'll explain all that to them. And the third part is, how are they going to get paid back? So they're the 3 things that you really need to know when you approach somebody and explain to them if you're going to raise capital in a large way. So just, Matt, one follow-up with that. When did you start out using any hard money in the beginning?
Yes.
Okay, so where was the change besides saying, I don't want to pay, 4 and 12 or, 2% on the loan or 4% on the loan or a 12% pref.
This plus that.
When did that change for you and go, I got to start raising my own money?
Well, it changed because somebody came to us and said, hey, I have an IRA and I'd like to start doing some lending with it. It's somebody I'd known for years. And he was a fellow real estate investor that had been doing IRA loans on his transactions and saw the money his investor was making and saw how his investor was able to roll that money over and over and over again and compound the interest over and over, and wanted to do the same thing with his own retirement account. Now, as you guys may know, you can't invest in your own deals with your retirement account. It has to be an arm's length transaction in somebody else's deal. So it was really by somebody coming to us and saying, hey, this is what I want to do. This is what I'm paying my guy. Will you take the same rate?
Like, yeah,
and
baby.
It was, yeah, that sounds awesome.
All right, so real quick, that's enough. Because if I get someone that's 55 years old and they start investing with me, when will they really want their money back? Okay, probably 15 years, it's 70 and a half, maybe. That's right. Maybe. So if I'm taking regular money, okay, they might, and they're married or the husband or wife, whoever gives me the money, in 2 or 3 years, they might want to take that regular money, that non-qualified money, and take that to buy a shore house or a house in Hawaii or move to Houston. But if I have an investor, I've been doing this for like 14 years, my self-directed IRA people that are with CAMA, they're with me for years and years because we're just compounding their money. And usually if you're working with an accredited investor, most of their money is either in their home equity or it's in their IRA. Very few wealthy people that I meet just have like regular money sitting around. That money's usually invested somewhere. Yeah. So it all goes back to sitting with Carl and going to his seminars because self-directed IRAs really tie into money, because that's where there's a lot of money. I know you have millions and millions and millions of dollars sitting up there, Carl, that people aren't using, that a lot of us would like to use, right, everybody? So, Come on, Carl, get on your game here. We need money from
can I make a quick comment to that?
Yeah.
So I was talking to Ryan, and I'll probably completely misquote him. That's Carl's son, Ryan, and he told me that it's in the neighborhood of 3% of IRAs in America that could be in self-directed IRAs or not. So 3% are in self-directed IRAs. The other 97% is untapped capital that's there, that's potential, that any one of us could put into a deal right now. Am I right, Carl? Is that right?
Yeah.
That's $20 trillion that we have access to that could go into a deal. It's qualified. It could go there, but it's not.
Ask him how much money is it.
What are some of the common misconceptions about raising capital?
So this is in the common misconceptions for people that haven't raised money yet. Let's go there. That people are doing you a favor when they invest with you, right? And I think that the biggest hurdle to get over is that they need you. And I think that we said this earlier on this panel, that an investor really can't trust or just rely solely on Wall Street anymore to reach their wealth goals in life. You're not going to, investors have a higher probability in either diversifying or going completely with compounded interest investments through real estate or with their IRAs versus just relying on Wall Street to take them where they want to go. So the bottom line is they need us. They need real estate investors to get where they want to go because we provide an alternative investment to them. So I think that's the biggest misconception, is that you're going to have to convince someone, or that you're going to have to get them to do you a favor to invest with you. But once you get it, once you've realized that this is actually something that they need, then I think that it kind of flips things upside down, and you realize that it gives you more it gave me more confidence when I realized that.
I've got some ways to connect with SDIRA investors, but I was wondering how you guys do it. Wendy mentioned RIA meetings, but what's a good way to track down individual SDIRA investors?
Talk about great ways that investing in IRAs benefits the IRA holder. Talk about it. If you talk about it, it'll come back to you. So put it out there either on YouTube at a RIA meeting, find a local SDIRA custodian that'll allow you to provide talk for them about how great real estate is. Talk about the benefits.
I'm relatively young. I guess, as you can look around.
Bragger.
Thanks. I just have a question, you guys. What's some advice that you could give myself and my business partner on talking to higher net worth individuals on building basis of trust in order for them to maybe invest with us as a company?
Cool. Yeah. So first of all,
we're mostly focused on large scale, apartment complexes, something like that.
got it. So first of all, don't ever broadcast that you're young again. Don't ever disclose. If you view that as a weakness, first of all, you're upside down. That's a great skill. That's awesome that you're young. I have people that invest with my company. I have some investors that are 24, 25 years old, right? People don't have to be over 50 to invest with your company, first of all, okay? So I think that it's just a matter of getting a good conversation down that you're going to have on why you're a great investment, okay? But then also flipping it around and seeking to understand first. Understand where they're coming from and everything like that. And don't let your age or your experience or whatever it is come up. Don't bring it up yourself because it doesn't matter, unless you make it an issue. If they want to go there, then go there. And first of all, when I first got started, I invested with people. I found people that liked and trusted me, not because of my track record, but because they knew me before I got started in real estate investing. So that might be where you have to start, is people that like you because you're Arthur, but not because you own 1,000 doors of rentals, okay?
Steve?